We are hosting today Mr. Khilen Shah of Hubtown.
Hubtown is going to take over Mumbai.
Earlier, the thought process was location, location, location. Now it is not just location. When you're giving people the product they want, selling in volumes is not a problem.
Take us through how you became one of the largest luxury residential unit owner in the South Bombay market.
This is the first ever slum rehabilitation scheme in India was done by our company. Sales was never a challenge, and we ensured that whatever we launched, we sold aggressively. So a lot of the customers are repeat customers as well. Building the brand was obviously an effort over the last 10 years. We barely spend anything on marketing. We are bringing in these entities at a discount into the listed company and benefiting the minority shareholders. I think that was always the plan.
How this whole merger will going to change the Hubtown's fate?
So we think there is a tremendous opportunity even within the MMR market. So not just in terms of open land development, but also in terms of redevelopment, PPP, URS, even SRA for that matter. Given the fact that we already have land reserves, at least for the next 5-6 years within the MMR space, so we're not looking outside. The customer experience is the most important factor in real estate.
Hello everyone, welcome to Beat the Street. Mumbai's real estate market is the most prominent market in the India's real estate. It accounts for 33% of the overall earnings. Last year, luxury sales have gone up by 89% and Mumbai accounts for the 70% of that. To take us this fascinating industry which is ever growing and yet to see its best time, we are hosting today Mr. Khilen Shah of Hubtown. He will be taking us through the company's journey, the industry, their future plans. Hello everyone, welcome to Beat the Street. So today we have Mr. Khilen Shah of Hubtown. He will be taking us about the industry of Mumbai real estate, the company, their growth plans. So I welcome Khilen.
Thank you very much. It's a pleasure to be here and talking to you.
So in Beat the Street at Beat Podcast, we go through the ideas about the management, their business, their plans, what they think about their industry. So that is the core idea of what we exactly do at the Beat Podcast. So Khilen ji, I'll start with a very simple question. Mumbai real estate almost saw the 69% growth. Mumbai real estate accounts for the 33% of the overall industry EBITDA, and luxury sales have been grown up by 89% in H1. So what exactly you feel about MMR region, okay, the Mumbai real estate market, which is a very prominent market of Indian real estate. We compete with the global industry standard. So yeah.
There are multiple factors and facets to the Mumbai real estate market generally. I think if we look at the first aspect, which is core demand, I think Mumbai is a great city because demand is honestly perpetual. There is always a need for more space in Mumbai. There is always a need for people to upgrade their current residences. I think families expand, so there is always a need naturally and organically for space requirements to increase. Mumbai has not been as volatile a market, especially in terms of prices, as other markets domestically in India have been. And therefore, Mumbai real estate is seen as a good investment, but also from an end user perspective, because the demand is so strong, it's seen as a good place to park your money, and it's seen as a good place to have ultimately a lifestyle as well. So from a demand perspective, Mumbai has been a very, very, I would say, constant and perpetual place for demand. Coming to the supply side, over the last 10 years, I would say that we have seen fantastic progress and evolution in terms of approvals process, in terms of the kind of projects coming to the floor, in terms of the kind of developers who are developing these projects. So not just from a branded perspective, but even from a non-branded perspective. So has definitely been a very good progression. I think customer confidence is definitely back because of a variety of these reasons. It certainly helps that we have a RERA. It certainly helps that we have a very active RERA in Maharashtra and Mumbai specifically, because customers feel that their money is protected in case something does go wrong in the project. I think the government is also cognizant of the fact that the approvals process had to have been streamlined and has taken steps in that direction, although there is yet a lot more to be done. So a combination of all of this adds a lot of certainty and predictability in the life cycle of a real estate project. Therefore, you see nowadays the projects which are getting launched, most of them, if not all of them, do get completed on time. Most of them, if not all of them, have a good quality, which is a far cry from what used to be the case before. A lot of projects, for example, used to earlier, start with a X plan and end up with a Y plan. Flat sizes used to increase, decrease, plans used to change willy-nilly. All of that with RERA coming in has completely stopped. And I think with this in general, I think when customer confidence is higher, it leads to a virtuous cycle of demand and supply. So I think customers have again started buying under construction properties, which for a long time, if you've been tracking the Mumbai real estate market, under construction properties were really taking a backseat in terms of demand from the customers, and people used to be like, "Nahi, thoda aur wait karenge, bhale hi thoda premium dena pade, but we will buy ready properties over under construction properties, so that their money and their life savings are protected." Now people are again willing to put their money into under construction properties. And granted, this is not a Mumbai based phenomenon. Under construction properties are done well even in other markets, but I think with Mumbai specifically, what's important is that customers, have a certain degree of certainty that, okay, it's largely end user based. The money is not going to, it's not a speculative trading which is happening in the properties, unlike other markets. So I think the market is getting evolved and is getting very strong, both from a supply side and the demand side. I think the future seems to be extremely positive. We've seen over the last 3-4 years that luxury has done extremely well. Luxury sales have taken off. I think it was preceded by a very large lull in the luxury segment for almost 7, 8, 10 years, and that demand is also catching up. But I think overall, if you talk about another, say, 3-4 years, I think the demand pipeline seems to be extremely strong. One can always argue, prices should be 5,000 rupees plus minus. That is not the issue. But I think overall, demand is fairly strong, and I think that will sustain at least this market for the next few years.
Thanks for explaining. So, Hubtown is also the largest inventory holder for the luxury and ultra luxury residential units in South Bombay, which is the prime location and also one of the richest hub of the millennials as well. Tell me some of the trends about what's happening in the luxury market. So, you said ki lull period ke baad we are seeing a boom.
Yes.
So, what exactly is happening? How a billionaire or a millennial thinks? Is there something with the economy, reverse brainstorming? People are coming back to India. So what are the trends going on?
Sure. So again, I think from a supply side, let me put it this way. Earlier, I started my answer with demand side. This time, I'm going to start with the supply side. I think the most important piece, especially in the luxury segment, is that people need to see that there is the right product. Money is not the challenge. If you tell somebody who's buying a 20 crore apartment, are you ready to spend 22 crores, for example? The answer more often than not is yes, but is the product correct? Am I willing to stretch? Yes, but I'm willing to stretch only for the right product. So the issue is honestly not the money. The issue is, am I getting the right product and value for that money which I'm getting? I'm sure it happens with every industries, whether it's stocks, whether it's other industries, wherever it is demand and supply based. So when it comes to supply, finally I feel that not just my products, but generally the products coming to the market are now what I would consider very good products compared to what was available in the market prior to the last 5 years. Now developers have understood the luxury market much better, have understood the buyer much better. And I can give you my example itself. Through our experience, we have realized that there are certain things which are extremely important for millionaires and billionaires, like you've said, or for people buying these kind of luxury products, uh, which we now give in our properties, which earlier maybe we weren't used to giving to our properties, but it was a learning experience for us as well. So let me tell you, for example, that for these people, privacy is extremely important. Vastu compliance is extremely important. Amenities are extremely important. So earlier the thought process was location, location, location. Now it is not just location. It is location with all of these other factors as well. So it's the kind of the kind of architect or interior designer you have for the common areas, the kind of elevation that you're giving, the kind of amenities that you're giving. All of these things are extremely important. So over the last few years, these kind of properties are now coming to the market. So the supply side has given these people who are ready to buy luxury properties a good buffet of choices as to, okay, I have a good location as well, but I have amenity, I have community, I have good neighbors, I have I have a good vastu, I have a good view, I have all of these things. So I have seen over the last few years the amount of properties getting developed in this segment and coming to the market in this segment has skyrocketed a lot. Now, obviously, as you say, now I could argue the price could be X, it could be Y, it could be whatever it is. You may argue that it's very expensive. It should be 10,000 rupees lower, 15,000 rupees higher, whatever it may be. But in the grand scheme of things, when a person is actually buying the apartment, especially in the super luxury segment, that 10,000 or 15,000 translates into 2 or 3 crore rupees. For that segment, that amount of stretching is not a problem at all. It's more about what are you giving for that, extra money or whatever it is. Are you giving the right value? Coming to my own projects, for example, like in 25 downtown, we started with a minimum flat area of almost 3,500 square feet, which is luxury by any standards, and especially for Mumbai. And our average flat size is actually higher than 5,500 square feet. So these kind of buyers who are looking at 30, 40, 50 crore rupee apartments, they want the best of everything and they have access to everything. So you have to cater around your projects, you have to cater your design, you have to cater your service levels, you have to cater all of this for that specific kind of buyer. The fifth tower that we're launching in 25 downtown is actually a 15,000 square foot per floor apartment. So again, you're talking about 150 crore plus kind of apartments. And now you can imagine, with that kind of budgets, people obviously have, a lot of requirements. So you have to cater to those kind of requirements to get that kind of buyer in. It's very important for us to understand the psychology of these kind of buyers, and we sit with all our buyers. We sit and understand what are their requirements, how can we support them. Some may have financial planning to be done, some may have specific customizations in the apartment to be done. So you have to plan the products to be extremely flexible, both from a financial product perspective but also from a plan perspective. Somebody may want a 15,000 square foot apartment for only 3 bedrooms, and may want to look at it as a large party pad, for example. So we have to have the flexibility in the interior design to ensure that the requirements of these people are met. So that's what we do. We make sure that these apartments are flexibly planned, and we also ensure that people get what ultimately they are paying for and getting a value for what they're paying. So that's really what we're doing. So even the inventory that we have, as you mentioned, we have one of the largest, if not the largest, inventories in South Bombay. But we found that when you're giving people the product that you want or they want, selling in volumes is not a problem because people ultimately are finding value. And once you kind of have a good community already established in a project, then they get their own friends, they get their own references, and then the project kind of builds its good community.
Okay, got it. So I think price is not the factor.
It's not
Correct.
it's not the only factor, and definitely not the most important factor as per my experience is concerned. It's a very important factor, but a lot of it is, I would say, value.
Mhm. So I think that is why the branded residences are forms the majority or the 90% of the portfolio of the overall luxury segment. That is why tier 1 developers like you have the edge over other developers. So I think let's go back. So let's start with the Hubtown's journey.
Sure.
Okay. So you have seen lot of cycles of real estate, legacy issues, all those issues. So
Yeah.
please take us through what has happened, how you became one of the largest luxury residential unit owner in the South Bombay market. So I think that's a phenomenal, so yeah, please.
Appreciate your comment. Like any other company, like any other journey, every journey has its ups and downs. Like any other company, we've also had our ups and downs. I'll tell you, the company's ethos has always been to ensure value for all stakeholders. When we started our business, I'm in the second generation of the company. So when my father and my uncle started the business, they started with something known as slum rehabilitation. Now, people in Bombay are very familiar with this concept of slum rehabilitation, but people outside may not be. So I'll just give you a kind of small idea of what it means. In slum rehabilitation, we the lands which are occupied by the slums, we clear them, we give free housing to the slum dwellers, we give something to the government, and we get area free of cost to sell in the open market. This is a win-win scenario for all parties involved, including the slum dwellers on the land who get the free housing, the government who gets rid of the slums plus gets revenue out of it, and the developer who earns money out of the free land that is opened up. This is the first ever slum rehabilitation scheme in India was done by our company. Uh, our ethos has always been to ensure that there is a win-win proposition for all involved, as I said. When we took up slum rehabilitation, there was nothing known as slum rehabilitation. Now, of course, it's extremely popular. We have done and delivered more than 15,000 houses in slum rehabilitation. This, from a business standpoint, which is important for your viewers, I guess. What's important is that with these kind of projects, we don't have to pay for the land upfront. So this means that your cash flow cycles are extremely efficient, although the projects are longer projects in terms of gestation period. But you also get access to extremely well located land because these are all city centric locations, in the middle of the city. So when it comes to identifying how we can create value, we are very good at that. We still retain that ability. So once we did some rehabilitation, we understood how to work with the government. We understood how to work with different types of stakeholders. We also took up urban renewal projects. We also took up PPP projects with the government. So we have PPP projects going on with government of Gujarat and government of Maharashtra, which gives us access to land which was otherwise not available for real estate development at what I would consider attractive valuations. So the company had a lot of these kind of projects. Even in 2007-8, when I consider the last kind of boom cycle in real estate, especially in Mumbai and India, uh, we had a lot of these opportunities that we kind of took up. And unfortunately, in 2011, the approvals process in Maharashtra and Mumbai specifically was extremely tight. And approvals were not forthcoming, and this was a general industry-wide issue that kind of had happened. Nothing to do with our company as such. This was just generally the policy of the government at that point, because of various issues at the industry level. And until 2014, so almost a period of around 3.5 years, approvals were not forthcoming on any projects. What happened is you had all of this land, you had all of these assets, but you could not monetize them because you could not get the approvals on it. And because of that, the cash flow cycles went for a toss, and ultimately we lost a fair amount of money because you had to keep servicing the debts which you had taken and all of that. And this was a event which honestly could not have been predicted. However, once 2015 hit and the government changed and the policies kind of became easier for development, approvals started flowing through, we immediately kind of got back on track, launched our projects, and we had the great land banks. So we had the various land banks in South Bombay, in Central Bombay, in western suburbs. And once the project started monetizing, because they were city centric locations, because we already had delivered a fair amount of projects before, so we delivered more than 14 million square feet in Mumbai, which is a big achievement for any player. I think people were not afraid of kind of delivery commitments that we had made. People were not having those kind of issues. Locations were excellent. Projects themselves were very good in terms of design, in terms of product offerings. So sales was never a challenge, and we ensured that whatever we launched, we sold aggressively, and use kind of those sales cash flows along with, of course, supplemented by construction funding that we had taken, and we had also sold off some of our non-core assets to kind of get back on track. And then by 2019, just as COVID was about to hit, we had already reduced our debt by about 30-40%. And then once COVID hit, obviously that during that 6-8 months there was a lull, but then the market kind of shot up. So luxury started picking up. And luckily, what had happened, since we had the approvals for these land passes, we could kind of take advantage of the cycle. And because we had a good land bank, especially in the luxury sector, so 25 South and 25 West and a 25 Downtown and and a Chembur, all and of course an Andheri West. The sales picked up in a big way, and obviously with the sales coming in, the developers and the bankers, the creditors, all of them got a confidence, and ultimately that led to a good cycle. And we kind of just built on the success of one project called 25 South, and we launched a 25 West, and then we launched a 25 Downtown. So these land banks were there. Of course, we've enhanced the projects by adding more land, all of that, but the base land was there, and we just made sure that we stuck it out on the cycle, and we kind of got the right people into those projects. We built the right communities, we delivered on time, we delivered with good quality. And then once kind of that happens, you build a good customer following. So a lot of the customers are repeat customers as well. So people who've bought in 25 South, for example, buy in 25 West. People who've bought in Chembur buy in Andheri, all those kind of things. So we've got a lot of repeat buyers. We've got a lot of very, very good people from the BFSI sector. We've got a lot of good people from the business sector, industrialists. All of them are our buyers. So we just hope to kind of expand this more and more. I think building the brand was obviously an effort over the last 10 years, especially in the luxury segment. We never did newspaper advertising. We never did overt advertising. We barely spend anything on marketing. It's purely on delivery and customer interaction and word of mouth. I think that's the best way to build a brand. We've done this over a period of time, so we realize no amount of advertising can substitute work on ground. No amount of you saying anything can actually substitute a quality. So if you're going to build a building where leakage is there, customers are obviously not going to respond to that. So we've tried our level best to kind of ensure good quality, timely execution, and ultimately that helps kind of get you more customers.
Great, great. So, uh, I think you have gone through a lot of ups and downs. Yeah. But I've read somewhere that as of today, all your land parcels are clean titles. At this significant juncture, when everything is working in the favor of the company, the markets, you are having one of the mega mergers of that 25 residences, which is one of your prized possession. So please tell us about it. What exactly the merger is?
So the group, I could say the group is split into two parts effectively. One is the part which is the listed entity, which contains a fair chunk of our land bank. The other are the projects which are on the private side, which are held by the promoter family. And they primarily consist of three projects, which are the luxury segment projects. So there's 25 West, which is in Bandra, and there's 25 South, and there's 25 Downtown. These are the three projects which have combined development value of almost 45,000 crore rupees. The companies holding these projects are being merged into a listed entity. It's being merged by way of a share swap, so it's not that the promoters are getting any consideration. These projects are all live projects. They're all projects which are under execution currently with all approvals in place, and they're doing fantastically well, as you know, in terms of sales and execution as well. And cash flows as well. So we're getting good cash collections in these projects. So the idea of merging everything under one roof, from a corporate governance perspective, I think we as a promoter family always wanted to kind of do this. Issues in the past, prevented us from doing it, and then we decided, once these issues no longer exist, it makes sense to bring everything under one roof and get the valuation, especially with regards to the way that the luxury projects are doing, especially with respect to like 25 Southwest and Downtown. We crossed more than almost 5,000 crores of sales last year as well, and I think we're on track to do that this year. So when we are getting in these projects, we're getting in those sales numbers, we're getting in those areas, we're getting in that brand value of 25 residences into the Hubtown project, into the Hubtown listed company. The idea was, everything under one roof and all real estate consolidated really under the listed company, which is Hubtown. Um, we I think we are under the approvals process for these mergers. We're awaiting nods from NCLT, of course, as you're well aware about this process. But we do hope that by the close of FY27, all the companies will be kind of merged into one. However, having said that, it's important for the viewers to also know that the mergers will be effected from 1st April 2025. So all the sales performance, all the collections, all of that ultimately will reflect, even in FY26 balance sheet.
There is another very important aspect about this merger is that the valuation of that projects, the ratio is today for the 25 residences and the listed entity is 1:1. So every one share will be given for the each shareholder of the 25 residences, which is the promoters. But the 25 residences has close to 40,000 crores of gross development value. Okay, so that comes to almost 900 per shares. But promoters generously, the management, the board, and everybody, all the stakeholders have taken only one share. So that projects that is for 3 Hubtown shares, but they are taking only 1 Hubtown share. But that even coming into that with the very low swap ratio, which is favorable for the listed shareholders, promoter shareholding will be going close to 70%. That's it. So the overall skin in the game of the promoters will get into the listed company. And
I'll put what you said in another way. Basically, we're bringing in these entities at a discount into the listed company and benefiting the minority shareholders. I think that was always the plan. I think for the promoters, we view this as a very long-term strategic merger. We view this as something that, we want to benefit the investors who join with us when times are not so good, and we want to ensure that they earn along with us. So definitely the assets are exceptional. I don't think anybody can deny that. I think people had concerns around the valuation, but as you can understand, with this kind of this kind of a move, financial move or a corporate move, I don't think anybody will have a concern around that as well. I think there's substantial amounts we've left on the table for our existing investors.
Definitely. Okay. So please tell us about some numbers. How this whole merger will going to change the Hubtown's fate. Okay. In terms of financials, if you can just give us some numbers, the debt,
Sure.
GDV, gross development value, and when the earnings are start hitting the listed entity. So please give us the brief about.
Simple numbers. GDV is around 45,000 crores of the entities being merged in. The numbers already start hitting. As I explained, the merger will be effective from 1st April 2025. Now project like 25 South, the project is about to get completed, and since we recognize revenue on a project completion basis, we have almost around 3,000-4,000 crores of revenues left to be recognized in that project. Uh, then, for example, 25 West and Downtown are projected to be completed over a period of number of years, starting from FY27 itself. So we are going to see an immediate impact on the profit and loss and the balance sheet. The good part about the entities that we're merging in, they're all running projects. They're all ongoing projects. So it's not that there is a gestation period or there is time to be taken for the projects to kind of, come to a certain level. So because we are getting in projects which are exceptional in terms of their location, exceptional in terms of their branding, and ongoing projects, I think the impact will be immediate.
Okay, got it. So tell us some unit economics of a luxury project. Let's say on 100 crore sales, how is the math come down to P&L or in terms of EBITDA, or how it's going to change our trajectory? Because till now the luxury projects were yet to be recognized. So please give us a brief.
So typically, luxury projects do work with higher margins, but a lot of that is dependent on the market scenario also. Typically, we work with around 50% EBITDA margins on the luxury projects, and post interest, it will be somewhere in the 35% range, which is reasonable for a Bombay project because it also comes with certain risks attached. I think the luxury projects that we work on currently, which is the 25 Downtown, South, and West, these work on approximately post-tax 35 to 40% margins.
Okay, great, great. So just for the sake of users and investors, currently the Hubtown works on a 20% EBITDA margins. But with these luxury projects coming into the play and the earnings start merging and everything, the merger gets completed, the margins will blended margins will somehow reach to 40%.
Yes, that is correct.
That is a fair, okay. Tell us about the upcoming projects. Okay, so I think one of the key thing I loved about your company is your focus being one of the most experienced real estate company. You still focus on MMR and your future projects are also around MMR.
Yeah.
So please also tell us about.
So we think there is a tremendous opportunity even within the MMR market. So not just in terms of open land development, but also in terms of redevelopment, PPP, URS, even SRA for that matter. So our focus is geographic because frankly, the promoters have a good experience in MMR. We have a good brand recognition in MMR. We have a good clientele already in MMR. And I think we would like to build on that, especially given the fact that we already have land reserves at least for the next 5-6 years within the MMR space. So we're not looking outside. Primarily, even within MMR, we are within effectively the island city and the central suburbs, and we have some land outside in the extended MMR region. But the focus still continues to be here at least for the next few years for the foreseeable future.
Okay.
Yeah.
So you are taking this 25 residences cash, generated, the money being generated to expand in other regions and with the other segments also, like you are launching bungalows.
Yeah.
So please give us a brief about it. Like
a very interesting project that is coming up in FY27, which is called 25 Estates. It's a luxury second homes project, which is very different from the other offerings in the market from our competitors. It's a 300-acre land parcel with only 170 bungalows. And that's a very low density project. It's something very different, very unique from what is in the market. Because that project hasn't been launched yet, I can't give you more details. But it's located approximately an hour from Mumbai, and we've got extremely good interest already from potential buyers for this project.
Great. What makes Hubtown different from others? Is it because of your low FSI cost, or what exactly?
So
is
the low
differentiator?
the low FSI cost is really a consequence of, I think, our core strength, which is our knowledge base of the Mumbai or the MMR development cycle and the way to increase, I guess, development potential of any land. So I would say knowledge is our core base, and I think our knowledge is not just with promoter, but it is across the organization. So we've done our, and it also stems from experience actually. So our experience is across all different kinds of developments. Like we have done SRA, we have done PPP, we have done PPP with the municipality, the state government, the national government. We've done it with agencies like MIDC. We've done MADA rental housing schemes. Our experience is really broad and varied. I don't think we like to limit ourselves to one particular type of development. And therefore, with our experience and now coupled with, good brand recognition, especially across the luxury space, I think it's a potent combination. What ends up happening, as you rightly said, with that is you get, frankly, lower FSI costs, but also then premium on the sales side.
Yes.
So I think we're well poised, especially going to the future, to kind of get that.
So just to further coming to the numbers, okay. So the highest margins which a Indian real estate player got is close to 30% on the blended side. But if that management side and the killing side, their blended margins will going close to 40% because of the low FSI and their core strength, okay, of maintaining the cost side, which is almost fixed. But the inflation on the sales side keeps on going. So one of their project also started with close to 60,000 per square feet, but now has been gone past to 1 lakh square feet. So that is how real estate markets gets being premiumized. So that's about it. Okay, so tell us about the future. Okay, so there are a lot of things happening in the market: green buildings, tech homes, innovations. And after this 25 residences, what is your next big thing you are focusing on, or like your vision? Okay.
Sure. So I think that's a broad question. I would say that in fact we're not going in the direction of futuristic. We're going back to our basics in terms of the design of buildings. So it's very traditional Indian oriented design. So square layouts, no random curves in the buildings, openable windows, things that people would actually feel comfortable living in. I think that the customer experience is the most important factor in real estate. So we're really focusing on customer experience, whether it be in design, whether it be in customer service, and that's really how we want to take things forward. I don't think people have attempted to do the kind of things that we are doing, especially when it comes to customer service. The other thing which we really want to focus on is on the luxury segment and the second home segment. As I said, 25 estates is something we're looking forward to launch because it's something truly unique. And we also feel once we've got experience and success in one project, it's a scalable concept, and it's scalable across geographies. So long term maybe that as well. So outlook wise, I think focus on core customer needs of living comfortably and ease of life, and then design products around that.
Okay. So just last question from our end, the commercial real estate market. So please tell us about whether Uptown has some projects on the commercial side, or what are
Sure.
the plans,
Yeah.
how things work there. So
Yeah. So without kind of going into too much detail, we do have two commercial office projects coming up this year. Let's in FY27. One is in Chembur, one is in Ghatkopar, and that's talking about strata sale units of smaller sizes between 500 to 1,000 square feet. For long term, we definitely have a pipeline of building assets per lease basis, or in South Bombay and Bandra, which are prime locations. So especially next year, we're excited about the launch of small office spaces. We think that market is doing fantastic, and we expect a very strong customer response.
thanks so much for explaining and taking us through the company, your journey. I wish you all the luck for
Thank
the
you.
merger.
Thank you.
Hope it gets soon.
Hope so.
Be able to see it. And yeah, so that's
Thank-
all from our side.
Thank you.
Thank you so much. Thank you everyone for watching us. And if you like the content, if you like us, please share your feedback and please hit the subscribe button.
Perfect.
Thank you.